You're listening to This Week in Real Estate with your host, Rob Golfi. Brought to you by the Golfi Team at RE/MAX Escarpment, featuring Conrad Zerini, broker-owner of RE/MAX Escarpment Realty Inc., and Brian Hogben, owner of Mission 35 Mortgages. Let's hear what's going on in real estate this week.
Welcome, everybody. We got Brian Hogben from Mission 35, Conrad Zerini, broker owner of RE/MAX Escarpment and RE/MAX Niagara, and myself. Guys, I was on talking to Scott Radley on CHML, and one question he asked me is it the market or psychology that we went through, which was a great question that he asked. And I responded, I says, absolutely, psychology is what gave us this stagnant market for 60 to 90 days. And I always tell people, hang in there. And what I found, and Conrad, you'll know this way better than I do. In the last 48 hours, I think the market's picked up a bit.
Yeah.
Mm-hmm. Am I reading the same thing as you are, or?
Yeah, you're 100% right. We've seen that, in the last little while, uptick in appointments. Even the news is getting a little bit better. They're starting to say, hey, we're starting to get this inflation thing. So there's some optimism. I don't think people could sit on the sidelines forever. And I always say, if you're buying and selling in the same market, who really cares, right? Like, you don't have to guess the bottom of the market. Like, at that point, you're going to get the most amount of money for your home. And when you're buying, you're going to get at the best possible price at that time. Right?
Yeah. And I truly feel that we've done, I'd say 90 to 95% landed where our market is going to be in price point. Like, I know there's going to be a lot of good deals out there, but I think we pretty well landed and where the market's going to land. And you're right. The longer the market stays stagnant, the better the market's going to be ahead. And if you look at 2017, and I think, now, correct me if I'm wrong, Conrad, I think this is kind of a similar situation in 2017 that we're having now. The only difference is 2017, I think the average interest rate was 3.99. Okay, normal market, actually, that is still a good interest rate, right, Brian?
Yeah,
that's great today. Yeah.
So now the only thing is we got spoiled with the low interest rates for the last 2 years, which was not normal. That was just to pick up the economy, and it did really well. So in 2017, the summer market, July and August, did very well. If correct me if I'm wrong, but I'm looking at the numbers, and I think that we're going to start having a good summer in this real estate market because we had such a long stagnant time.
Yeah, it kind of dropped off in 2017, and then we had a lot of unsold inventory in 18 that went over, like that December inventory. A lot of it went into 18, and then we saw this kind of quietness in 18. But look, you got to remember too, employment wasn't as strong as it is. Like, unemployment figures are incredible right now. It's the lowest it's ever been. And the thing is, a lot of people wait on the sidelines for all these bargains because people are going to default on their mortgages. Never in the history of Canadian housing has anybody defaulted on a mortgage with higher interest rates, with an interest rate change. It's always been an employment thing, unemployment. That's when people default. But I really did a good study from 2012 to 2022 to today. We had it hovered like high fours, low fives, believe it or not. Back in 2012, it was 5.24, the interest rate. And those were good markets. And that led up to 2016, which was crazy market, and then 2017. And then from 97 to 2007, it hovered on the high sixes, low sevens. And then from 77 to 92, it averaged at 9 to 10, except for the anomaly year, which was 1982, which went as high as 19 and 20%. but it seems to be in these little 15-year clusters, right? And I think we're going to be shifting to a new cluster, and a lot of great talk about 2023, but people will adjust. They're going to slowly adjust, and look, coincidentally, when they made an interest rate announcement, it really changed the values, and people started to the supply came on really big, right? So
yeah. So, and you look at the interest rates today, like even if the rates go up by 0.75% next week, a discounted rate's still going to be at 3.99 or 3.89 or 3.79, right? So you're kind of bringing it back into, like you said, Conrad, to a historical average there, right? And I think with a lot of our clients and pre-approvals, these interest rate increases are already baked into the decision making, right? So it's almost like most mortgage agents, and most good ones anyways, are just saying, hey, this is the price today, but this will be the price a month from now, and this could be the price 3 months from now if you see a 0.75 and then a quarter or whatever you see. So people are now kind of like, okay, I can understand that. I think there's two different psychologies of it right now. There's the psychology of someone who has owned a house for 12 months, right? They have a very different perception of things right now than someone who's just thinking about getting into the market right now. And I think if the people that are getting into the market right now are talking to homeowners for 1 year, that's not a great conversation right now, right? But I think it's the homeowners that should be jumping in right now, to your point right now, the opportunity is now, the interest rates are affordable now, and the expectations that people are setting for the next 12 months are sound. I think they're good.
Yeah. You know what? I'm still looking, and I'm looking at buying something right now, even though with what's going on, like, so I mean, I'm a realtor. I'm not scared of the market, which direction it's going. Whatever you buy now, anyway, 10 years from now, it's worth double. So I don't think anybody has to worry about, $10,000, $20,000 either way. It depends on the price point that you're buying, but I do feel there are some good opportunities out there. I've been looking. There is some opportunities out there. You can actually go out there and look at some houses, put an offer in, negotiate a good deal, and put your clause, financing, home inspection, insurance clauses in there to make sure that everything's covered. No surprises on closing date. When you walk in, you got asbestos, or you got vermiculite insulation, or whatever. Everything's all good there. I don't feel there's anything there, but like we were saying though, the stagnant market, you're right, can't stay too long. It just, people got to start eventually coming out. And,
the demand is there.
It's funny. I think there's just like in our side of things right now, I think a lot of the uncertainty comes down to the rate conversation. And the reason being is because it is like, it's like reading a hieroglyphic or something like that, trying to figure out a rate sheet right now, even for mortgage agents, because, if you get a variable rate, there's one approval. If you get a fixed rate, there's another approval, right? And then if rates go up or when rates change, there's a different approval, right? So, the normal expectation for a home buyer to go out and get a house is kind of like, hey, you're good, you're buying a house, and this is what it's going to be. There's just a few more conversations that people need to understand today, which I think, can sometimes create uncertainty. Sometimes too much information is bad for people. And I think sometimes and that's all over the news right now, is about rates. But it's just really need to simplify. Here's your solution. If you're getting a variable rate, which people are taking a lot of right now because they qualify for quite a bit more on a variable, this is what it's going to be. Are you comfortable with it? Great. And I think the waters are getting muddied with almost too much information right now.
Well, and I think you got to buy. Like, I think the time to buy is really, really now and then the next little while. There's no more billionaires and millionaires were made in a bear market, right? And we're in a residential bear market right now, very similar to the stock market. More people make money in a bear market than they did in a bull market, okay, on the way up, okay? And the thing is, you think back to 1982 when interest rates hit, the 20% mark, Right after that, we saw tremendous growth in real estate into the 80s, if you all remember, right? Some of you guys are old enough. Maybe Brian, maybe not so much.
I was 3. I was I don't know.
But then the amount of growth that we had in the 80s, like, 84, 85, 86, 87 to 89 was unprecedented. And it came after an uncertain time, high interest, and here we go. So, this is the time. Like you said, this is the time to find the deals, and over the long run, even over the short run, you'll start to see a return quite quickly.
Brian, quick question. Is it best for someone to go variable right through the whole 25-year amortization, then lock in 5 years at a time? Will they save money in the long run if they go variable all the way through?
Historically speaking, yes. Right? Historically speaking, if you're to look at rate charts, for sure. But if you're going to look at it, like, listen, if you took a 5-year fixed rate 8 months ago, hallelujah, that's going to outperform the variable, right? But will it in the next 5 years? I don't know, right? Like, you are rewarded for the risk that you take on a variable. The reward is a lower rate, right? So I think you are far better off. And the other thing too that people don't think about or don't forget sometimes is the penalty. If people refinance, people get divorced, people move, people change jobs. Even if you got the best fixed rate, but then got hammered with a $20,000 penalty, who cares about the savings, right? And most people, 75% of people are going to break a 5-year fixed term because life happens. So it's not only the fact that you're likely going to save more money over a 25-year AMROB, and I like how you put it over a long period of time there. There might be a 5-year interval where the fixed outperforms, but you weigh in the factor of the flexibility with your penalty and just life situations. I still think the variable, so long as you can sleep at night, if you're a worrywart, don't take it, right? But I think it's a far better solution.
I remember when I had my more. Go ahead, Conrad.
No, I was just going to say we're in an uncertain time. So in the uncertain time, look, this doesn't last forever. So take advantage of the variable until things stabilize. And then even that insecure person you're talking about, Brian, this is the time to ride it out. Because, in 82, it only lasted about like 9 months. So if you can, during these uncertain times, go with the variable rate. That's your best answer right now as things start to stabilize, and then lock in 100%. Then you'll start to see a trend. And look, when if they see too much recessionary numbers coming back, they're going to pull back quickly. And then you've got that opportunity to pounce.
Yeah. And I was just going to add on that. If you have someone that's really that fearful, take a 1 or a 2 year term, right? Yep. Take a 1 year fix or a 2 year fix. Because right now, 1 year terms, they're like 4.25%, which ain't bad. You know what I mean? You're still paying a premium, but it's about 3/4 below what a fixed is. So take a 1 year or 2 year. Do you know what I mean? Then you're kind of in the sweet spot. I still agree with the variable, but I think that's a good compromise if you have to take something fixed.
True.
Conrad, on large commercial like investment, like plazas and stuff like that, would you go variable or do you lock in?
Well, it's funny because I was going to tell you, for the last 19 years, a lot of the stuff that we did was variable, and we won every time. The only difference now is, we were on the plus side of the variable piece, right? Versus fixed. However, now, because we're in this uncertain time, a lot of people are locking in because they don't want their bankers reviewing the loan on an annual basis. So this is an uncertain time. This is a time where you're going to stabilize rents, stabilize tenants. So you're going to need 3 to 5 years of leave me alone, bank. Let me run my thing the way I want, right? That's where the difference is. Okay. A lot of guys are going fixed because they want to be able to. This is a time to entrench and stabilize. So they're taking the fix. So they're not going to be, the bank's not knocking on their door because it's tied to rents. And if they don't see the rents going to a certain point and they cap rates, if there's a pressure on cap rates, well, then the bank's going to say kick in more capital to stabilize. So a lot of guys are saying, look, I'll pay the premium to use the commercial capital closed. So I'm not bothered. Let me do my thing, Mr. and Mrs. Banker, for the next 5 years to get this thing stabilized.
Nice. Anything else happening in the market that we could say before we close off? Anything showing, appointment center, anything like that?
Yeah. Well, you know what's interesting? It's funny because today I'm doing my weekly update, and I what I did was I want to be current, so I thought, what's the number one area that's being that's on our website? Believe it or not, it was Ancaster. So then I thought, okay, I got to pull Ancaster out, and it's interesting. Ancaster did, it gradually went up. It didn't go crazy, and we're starting to see it's a nice little curve. We're starting to see some stabilization. Townhouses are leveling out, much more so than, let's say, something like the Hamilton Mountain, where it really went up and it kind of dropped. So it's very interesting about the burbs. And the other thing about the burbs, really cool stat, the suburban office rental is better than downtown rental.
Wow.
So people are adjusting. They're saying, we don't have to go downtown anymore. Maybe we have these little kind of micro offices in the suburbs.
Yeah.
So hey, don't give up on the suburbs quite yet, guys. You're going to be working and playing and doing everything still in the suburbs. So it's the jury's still out on that.
That's awesome.
And I wanted to just challenge you guys on one thing here for when we tune in next week. Okay, let's have a little bet here, and we can decide what the winner gets. Okay, Bank of Canada rate hike, July 13th. Yeah. Who's taking 0.5 and who's taking 0.75?
I take the 0.5.
I'm going 0.75. But yeah, with a little bit of caution.
I'm taking 0.75 too. I don't want to, but I'm taking 0.75. I think so.
Rob, you could be right. But you know what, Brian, you got to give us an indication here, because it's the next little period of time. No, this is where it's going to be interesting.
Yeah.
What is the uptick on people going and securing rates during this next 6-day period? That could really tell us what the market's going to be in August and September.
I just think because the Bank of Canada got so scolded for the past couple months, they've got their foot entrenched in a 0.75. So if Rob wins, what does he get, Conrad? What does Rob
you guys gotta take me out for lunch.
Okay. Absolutely, we'll do it.
Right.
I'm there.
No, you paid 1% of my interest on one of my properties.
Sure, the one that's almost paid down. You got it.
That's it. That's it. But one question is, do you think this is the last one? Is this the last one?
I think if we see 0.75, the Bank of Canada takes a holiday in August, which is hallelujah. That's another reason why I think they'll do 3/4. I think my personal opinion, it'll be very light in September. I think you'll have some time to catch up, and we might see a quarter in September. That's my hope. That's my thought.
Really, even still, they're not going to stop. They're just going to keep going.
Well, I think a quarter. I think that would be them saying, "Hey, you still be good. Don't go spending too much money. We'll just give you a little bit of an increase." That's my thought. So, guys, thanks a lot. Conrad, perfect. Thank you. Broker owner, RE/MAX Escarpment, RE/MAX Niagara. Brian Hogben, Mission 35 Mortgages, and myself, guys. Thank you, and have a great weekend.